Now, when the short-term trend line is broken, the market will predominantly move to the medium-term or outer trend line. Okay? And when the medium-term trend line is broken, the market will aim to test the longer-term trend line. So it's important to keep track of trend line breaks. Now, trend lines act as support and resistance. So when a uptrend line is broken, it will now act as resistance, and when a downtrend line is broken, it will now act as support. So here we have the trend line acting as resistance, as the trend line is preventing the market from going higher. So we say it's acting as resistance, and whenever it is preventing the market from going lower, in this case, we say it's acting as support. Okay? So the market breaks the inner trend line, find resistance at the backside of the inner trend line, and advances to the medium term trend line. So whenever the market breaks the inner trend line, on most occasions, it will go to the medium term trend line. And here at the medium term trend line, what did we see? We see an engulfing bullish candle. Okay? So we see an engulfing bullish candle and the market rises. So it's important to keep track of the candlestick patterns again when they occur in the direction of the trend. So we have an engulfing bullish candle here. And for example, if we buy this engulfing bullish candle at this trend line and place our stops below the trend line, we would have made a lot of money. Okay, so remember, trend lines act as support and resistance. So when a uptrend line is broken, it will now act as resistance, and when a downtrend line is broken, it will act as support. So here is an example of that. We see the market breaks the downtrend line, falls to the backside of the downtrend line, and finds support. We then see the market begin to rally. Okay, so this is an example of a downtrend line acting as support. Here is another example. We see the market breaks the trend line, falls to the backside of a trend line, and finds support here, and then also finds support here. And then we see the market begin to rally. So these are two examples of a trend line acting as support. And here is an example of a trend line acting as resistance and support. Here we have tweezer tops at the trend line. As you can see, tweezer tops at the trend line, and the market began to fall. Okay, so the market is in a downtrend. We have the trend line acting as resistance, and we also have the tweezer top candlestick pattern, and the market fell. Here we have break of downtrend line. The market falls to the backside of the trend line, finds support, and begins to rally. Okay, so always remember, trend lines can act as both resistance and support. And here we have another example. So here we see an uptrend line acting as resistance. Okay, so break of trend line, market rallies to the backside of the trend line, and we have the trend line here acting as resistance. And this is a very powerful trading technique. You can trade trend line breaks or trend line bounces. So whenever the market breaks a trend line and rallies to the backside of the trend line, you can sell the market, especially if you see a candlestick pattern. So this is an extremely powerful trading technique that you can use to trade. Now, did you learn what are trend lines and how to draw trend lines? Did you learn the significance of trend lines? Did you learn that trend lines act as levels of support and resistance? Did you learn how to trade trend line breaks and bounces? And Did you learn the ABCD price wave movement and how to identify these movements? Also, if you're enjoying this course, please leave a review. Reviews are what will help keep this course relevant. So if you are enjoying this course, please leave a review.